Welcome to the Deep Dive, where we really try to cut through the noise and get straight to what matters in complex information. Today, we're looking closely at Textron Inc., the multi-industry giant. And our goal here is to really dissect their second quarter 2025 earnings call and the related financial reports. We're going to unpack the key performance stuff, strategic shifts, and dig into what's actually driving their business. Think of it as uncovering Textron's, their strategic thinking for future growth and what it means for aviation, defense, industrial innovation, that whole landscape.
Exactly. And these reports, they give us a pretty unique window, really, into how a major company like this navigates the current market. I mean, we're seeing everything from accelerated military programs, shifts in commercial demand, even the impact of new tax laws. What's really fascinating, I think, is how these different parts, they don't just operate separately, they interact. They shape the company's overall financial health, its future direction. It's kind of a masterclass in how diversification works strategically.
Okay, so let's dive right into that big picture then. Looking at Textron's overall financial health for Q2 2025, what are the headline numbers telling us? Can you give us the quick rundown? Revenues, segment profit, adjusted EPS, how did they stack up against last year?
Sure. So the core figures, they tell a pretty compelling story, actually. Total revenues hit $3.7 billion. That's up a solid 5.4%, or about $189 million, compared to Q2 2024. Segment profit saw a slight rise, up to $346 million. And adjusted income from continuing operations, that landed at $1.55 per share. So just a small bump from $1.54 last year. It's not just growth for growth's sake, though. It points to pretty strong operational execution in what's still a dynamic market.
Yeah, that makes sense. But what I'm really interested in is the cash. How do these numbers actually translate into cash flow? And what about the outlook for the full year? Especially because I noticed their manufacturing cash flow guidance actually went up. That feels significant.
It absolutely is significant. Manufacturing cash flow before pension contributions was $336 million for the quarter. Healthy number, up from $320 million. And yes, you're right, they increased the full-year guidance for that, now projecting between $900 million and $1.0 billion. A big part of this, a significant enabler, is the recent tax reform legislation. Things like allowing immediate deductions for R&D, full-cost write-offs for eligible assets. That's a game-changer for cash flow. Instead of spreading those deductions over years, Textron gets to reduce taxable income now, which, frees up significant capital for investment for shareholder returns right away. Now, it does cause a little bit of a near-term adjustment, a slightly higher adjusted effective tax rate for the year, maybe 20-21%, but it clearly shows they're looking at long-term cash generation strategically.
Okay, that tax angle is key. And on the flip side of using that cash, what about returning value directly to the shareholders? How does that fit in?
Yeah, good question. They returned a substantial $214 million through share repurchases just in Q2. That brings the total for the year so far to $429 million. So it really demonstrates a clear, active capital deployment strategy. They're focused on opportunistic buybacks as part of their financial management.
Right. Okay, so moving from the big financials, let's zoom in on Bell. They saw a really impressive jump in revenues. What was the main thing driving that, especially on the military side? And why is this particular program so significant?
Bell's revenues, yeah, they surged up $222 million, which is a 28% increase. Impressive. And it was driven primarily by the U.S. Army's MV-75 program. You might remember it as FLRAA. Now, the key question is, why is this program such a big deal for Bell and the Army? Well, the Army announced they want to accelerate it. And the 101st Airborne, they're slated to be the first division to actually operate the MV-75. That's a huge vote of confidence from the Army. They're betting heavily on this next-gen tiltrotor tech.
Acceleration. Okay, so what does that actually mean for the MV-75 program itself? How does Bell manage to speed up something so complex? What's their specific role in making it happen faster?
Well, the acceleration basically involves Bell fast-tracking the MV-75. They're moving it from the final design and testing phase, that's called engineering and manufacturing development, or EMD, straight into building the initial batches for the Army. That's the initial low-rate production, LRIP. They're essentially pulling that production forward by about 18 months, which is quite a bit. And a key part of how they're doing this is they've already delivered 2 MV-75 virtual prototypes to the Army. These are advanced simulators based on a digital twin of the aircraft.
Digital twin, right, like a full virtual model.
Exactly. Think of it like walking through a building virtually before you lay a single brick. You can see everything, test everything. That's what Bell's doing. Catching issues, refining tactics digitally, way before the physical aircraft are widely fielded. It supports early training, developing TTPs, tactics, techniques, procedures, leveraging the tiltrotor's performance benefits early on.
That digital twin approach sounds really cutting edge. But does speeding up a program this big require more investment from Textron? How are they handling that?
Yes, it definitely requires more capital sooner. No way around that. But they've described it as, quote, a manageable number and ultimately a fantastic outcome given how important the program is strategically. And on another sort of related front, Bell was also picked as the sole company for the next phase of ARPA's Sprint X-plane program. That focuses on high-speed VTOL vertical takeoff and landing, so it shows they're still pushing hard on future R&D.
Interesting. And what about the commercial side for Bell? How did things look for their non-military helicopters?
Commercial revenues were up, about $73 million higher. That was mainly due to a favorable aircraft mix, though the actual number of deliveries was consistent: 32 commercial helicopters in Q2, same as last year. One notable order was for 12 Bell 412 EPXs for the Tunisian Air Force. Deliveries for those start in early 2027.
Okay, so from military high-tech to Textron Aviation's commercial side, they also saw revenue growth. What's the kind of the pulse of the Citation jet and turboprop market right now?
Yeah, Textron Aviation revenues climbed by $42 million overall. Most of that, $35 million, came from higher aircraft sales and another $7 million from aftermarket activity, which is always good to see. They delivered 49 jets in Q2, which is up from 42 last year. So positive movement there. However, commercial turboprop deliveries are actually down a bit, 34 compared to 44 last year. But despite that dip in turboprops, the backlog remains really solid, $7.85 billion. That signals good underlying demand.
Okay, solid backlog. Are new products and just general demand keeping up with what they expected, especially with those new models coming online soon?
Absolutely. They're seeing solid demand across the board, really.
Yeah.
And there's definitely excitement building for the upcoming models, the M2 Gen 3, CJ3 Gen 2, and the Ascend. Deliveries for those new aircraft are expected to, boost performance in the second half of this year. We also saw some specific orders mentioned, like 4 Citation jets with an option for 8 more for a customer in Mexico. And the first deliveries of the Scout Courier happened in South America, plus the first aeromedical order in Africa. So expanding reach there.
Right, but what about those margin challenges you mentioned for aviation? Specifically, the higher warranty costs. What does a true up of reserves actually mean for us listening?
Good question. So segment profit for aviation was down $15 million. And that was mainly due to aircraft mix and, like you said, those higher warranty costs. Although manufacturing efficiencies and better pricing did offset some of that. Now, the warranty costs specifically being a true-up of reserves, that essentially means they had to adjust their pot of money set aside for future repairs. They had to increase it. It indicates they saw a higher than anticipated need for warranty work on certain products recently.
So kind of catching up to reality there.
Exactly. It's a bit of a short-term hit to the margin, but they do anticipate stronger margins in the second half of the year. The production ramp-up, especially for jets, and the recovery in turboprop lines like the King Air, should help.
Okay, got it. Now, Textron Systems had an interesting story. Revenue's slightly down, but profit was actually up. What's going on there? Especially with some program terminations being announced. What's next for them?
Right, Textron Systems revenues were a bit lower, yeah. But segment profit increased by $5 million. That was mainly because of lower selling and administrative expenses. So cost control helped. Now, regarding the program terminations, the Army did terminate RCV and FTUAS. But it's important to understand this isn't necessarily the end for Textron in those robotics and tactical UAS spaces. The Army is still going to invest there just through different acquisition pathways. And Textron plans to actively chase opportunities in those new avenues. So it's more of a redirection than a full stop.
A redirection, okay. So what new opportunities are popping up to sort of offset those terminations? How are they strengthening the systems portfolio?
Well, there have been several key wins and growth areas. Textron Systems got a pretty substantial $354 million contract modification for their ship-to-shore connector craft. Plus, that was boosted by another $300 million through a reconciliation bill. So, significant funding there. They also secured Milestone B approval for the XM30 program. That moves it into the engineering and manufacturing development phase. And maybe most interestingly, they made the first sale of their Tsunami autonomous unmanned surface vehicle to the U.S. Navy.
Ah, the unmanned boat.
Exactly. That marks a significant entry into a new naval domain for them.
Okay, and then the industrial segment. Lower revenues, but again, increased profit. What's the story behind that apparent contradiction?
Yeah, the industrial segment's revenue decreased by $75 million. A big chunk of that was simply the result of selling off the power sports business. and also lower volume in golf products.
Hmm.
But despite that revenue drop, segment profit was actually up $12 million. That reflects the positive impact from getting rid of power sports, plus cost cuts from restructuring. The strategic decision here, and this is quite insightful for you, the listener, is that even if a business is profitable, selling it can make sense. It lets Textron streamline its portfolio and, aggressively reallocate that capital towards areas they see as higher growth, more future focus. It shows a really clear long-term vision for optimizing the whole portfolio.
That is a clear strategic move. Any interesting developments in the industrial businesses that remain, especially looking towards those new growth areas?
Oh, absolutely. Cotex, which is part of the industrial segment, secured a really prestigious award. It's called Pentatonic. It's a significant recognition in the auto supply world. And they got it from a leading European car maker, an OEM. The award is for a BEV battery electric vehicle component, a composite lower battery housing unit.
So jumping into the EV space directly.
Exactly. This is their second OEM platform win for this kind of technology, and it secures what they called a major foothold in the global BEV market. It's fascinating because it shows that pivot towards future auto tech isn't just talk. There are tangible results, like this award.
Okay, good stuff. Let's just briefly touch on aviation. Revenues are small, obviously, but there seems to be progress. Tell us about the Nuva V300 and where it fits in.
Right, the Nuva V300. It's their long-range, large-capacity hybrid electric VTOL unmanned aircraft. It continued its flight test program, and it actually made its public debut at the Paris Air Show. Now, they're pretty upfront that there isn't a near-term pathway for commercial certification. The rules for these kinds of aircraft are still being written, basically, but there's significant military interest because of its range and payload capabilities.
So dual use potential.
Precisely. And the key question this raises is how Textron leverages that innovation effectively when the commercial side is still uncertain from a regulatory standpoint. It's a smart play to explore both avenues.
Okay, and finally, just a quick look at the finance segment. Anything notable there?
The finance segment, yeah, it saw small increases in both revenues and profit. Nothing dramatic, but it continues to provide steady support to the overall business. Kind of the quiet bedrock.
Okay, so let's wrap this up. What does this all really mean for us looking at Textron? This deep dive into their Q2 results, it paints a picture of a company really navigating diverse markets strategically, actively realigning its portfolio. You see it everywhere. Accelerating key military programs like the MV-75, using innovative tech like digital twins there. You see the steady commercial aircraft recovery, and then these calculated exits like selling power sports to really focus on emerging opportunities like those BEV components at Cotex. Textron is clearly not just sitting still. That investment in advanced tech, the MV-75 digital twin, the Nuva V300 testing, it shows a real forward-looking approach.
Yeah, and if you connect that to the bigger picture, it really demonstrates how a diversified company like this can find growth, even when government spending shifts or global trade policies change. The resilience they showed managing supply chain issues, like after the strike at Textron Aviation, that's notable, and strategically investing in these high-potential areas, BEV, advanced VTOL technology, those are definitely key takeaways. It shows a company that's really playing the long game.
And this raises, I think, an important question for you, the listener, to consider. How might this accelerated development of advanced military aircraft tech, like we see with the MV-75, eventually influence future civilian aviation, or even other industries entirely, especially with that focus on digital twins and rapid prototyping? It's a really compelling thought, isn't it? How military innovation can often be that unexpected spark for much broader technological change down the road. Something to chew on.